Hello and welcome to this week's Market Outlook webinar with me, David Jones, in conjunction with Aondo Markets. This is a webinar that I do every Wednesday lunchtime at 12:30, and it's a look ahead or look back as to what's been going on with the markets, and a look ahead as to maybe what we can expect in the days ahead, which is a little bit tricky considering what's gone on overnight. If you're watching the recorded version of this, it was held live on Wednesday, the 9th of November at 12:30 in the afternoon. I'll just leave the risk warning up there for a bit. Clearly, we had the US presidential election yesterday, and in the early hours this morning, it turns out that Mr. Trump is now the president-elect for the USA, confounding the pollsters once again, and not surprisingly, injecting a fair chunk of volatility into overnight markets, but with a strange reaction this morning. We'll have a look at this in a bit more detail. I've got like a longer term or a medium term trade on the S&P, the broader US stock market index, an options trade that I've had on for a few weeks, and it expires a week on Friday. And it was all looking okay last night, and I woke up this morning about 6:30. I thought I'll just check the prices. And you know, where you see something, you think, I'm not reading that right. There's still some sleep in my eye, and I thought, well, there can only be one thing that's happened. And of course, it was that surprise of the Trump win. So what we're going to do, we'll start off by looking at US stock markets. So this is the Dow. So what we're using here, this is Aondo's trading platform, Trade Hub. So these are the charts. Before we look at the overnight, let's just remind ourselves what happened. You know, we did towards the end of last week. You know, we saw a definite weakening of US stock markets. You know, we saw markets wobbling quite a bit last week as Mr. Trump was gaining in the polls. I think we were probably talking about it on last week's webinar. And then so a weak close on Friday. You know, markets closed near the lows, US markets on Friday. And then over the weekend we had that update from the FBI saying there was nothing, no further investigation or whatever to do with Mrs. Clinton's emails. And then on the beginning of this week, we saw this massive gap up. You can just about see here the Dow on Friday finished at 17,900, started Sunday night about 100 points higher, and then just traded up all day long. That continued into yesterday. If we look at the close last night in the US, it would have been 9 o'clock UK time, so we're up about here. And then, as clearly as the election rolled on, we saw the overnight market push a little bit higher. So I think, was it 1 o'clock this morning-ish? Yeah, about 1 this morning. The Dow was trading about 100 points higher than it had been at yesterday's official close. But then, of course, as we saw on the Brexit vote, without drawing too many parallels, but in terms of a shock for markets based on what the pollsters were saying, I think someone's just having a bit of problem with the sound. Assuming everyone else's sound is working, I'll just say to try logging out. There we go. Let's do that. Okay. So we had, again, this sharp move, and we've had a massive range overnight. We went from just shy, 18,450 was where we saw the Dow trade, as low as 17,490 at sort of 5:15 this morning. So a 1,000-point range overnight. That is an enormous move. But look where we are now. I put on Twitter, I think about 9 o'clock this morning. If you'd have been told over the weekend that Trump was going to win, who would have forecast that Wednesday 9 o'clock the FTSE would be 100 points higher than where it finished last Friday? So I think it's a really surprising reaction, and it does make the market difficult to call. I think the next few days, the economic side of things is taking a massive backseat, and it's going to be driven by, I don't know, whatever political murmurings we hear coming out of the USA and everywhere. But we've seen this fantastic bounce back here in the overnight. It's still clearly a chunk of points below yesterday's close. But if we just flip this over to something not quite as short term, if we look on the hourlies where the Dow is now, again, it's still higher than where it ended last week. It ended last week around about 17,900. So it's still 150 points above Friday's high. So I think it's a really surprising reaction, I think, by stock markets, because many people thought, well, Hillary Clinton, clearly the safe option. Donald Trump. I think I saw plenty of commentary earlier this week that Donald Trump means an instant at least 5% wiped off stock markets, and we saw the volatility overnight, but we haven't seen it today. Clearly, when we're looking at the US market, we are looking now at the overnight market, so we're going to get a much better picture at 2:30 today when US markets open officially. But if you look at the way Europe's reacted, it's a surprisingly positive move, I think for stock markets. But we need to see, I think, what the next couple of days bring. I've got my options trade on the S&P, so I could do with a bounce back. I've got a mix of sort of medium to longer term positions on US shares, long and short, so they're reasonably balanced. But I think when it comes to calling the US stock indices day to day, I think it's going to be a tricky one over the next couple of days, to say the least. So personally, I don't think I'll be doing much. But let's try and take a step back and maybe see where we were before all this started. If I flip it over to the S&P 500, this the more broader US stock market. Clearly, similar moves overnight in terms of volatility for the S&P 500. Hang on, I've clicked on the wrong thing here. But coming into yesterday, or coming into today, this was a market that was in a downturn. I think I tweeted the picture out last night. You can see we're on daily candles now. You can see, just what an extreme move that was overnight compared to the sort of moves we've been seeing lately. But I think it's going to be an interesting couple of days anyway, because if we look at, if we plonk our trend line from the highs in September, just before it started falling off a cliff, what was interesting yesterday before all this craziness kicked off was that we'd seen that rally back in the S&P and in the US market, the Dow, sorry, back to that longer term trend line. And I think that this whole 2150 to 2160 area is going to be an interesting one to watch. At the moment, we're trading at 2106 on the S&P, so we are away from it. But I suppose you could say the fact that the market has not fallen off a cliff, or has fallen off a cliff and has recovered, it does suggest that we could well see some stock market strength in the weeks ahead. If I was a betting man and someone put a gun to my head, I'd probably be betting the market is going to be higher than the end of the year than it is today. Famous last words. But I think the big levels to watch are these highs, these mid-October highs on the S&P, 2150, 2160, and let's just see how the next few days turn out. If we have a look on the Dow, if we look at a similar thing on the Dow, I'm sure we'll see not maybe as much of a pronounced downtrend on the Dow, and it had actually broken out of its downtrend. It had a much more shallower downtrend. But again, let's see if we can push back and sort of break these highs. But I don't think I'll be doing anything with these this week. I think it's just a matter of sitting there and seeing how things pan out. Will it go back and try and test those overnight lows again? Who knows? We've seen these are hourly candles we're looking at now. We sort of, a pretty sharp reversal when the result was confirmed. It really did, rally like a maniac from about 5 o'clock this morning after falling off a cliff. So let's see what happens. I'm a bit clueless, to be honest, with US stock markets, how they've reacted. If you look at the FTSE, same sort of pattern, obviously similar sort of moves. We saw the FTSE last night in the out of hours market push through 6,900. And then overnight, it lost almost 400 points, and then it's bounced back again. And we're back where we are now. And if we flip over to, do you want a shorter term or a longer term? A longer term view. There we go. So there's our daily view. So for me, if we took the overnight trading out, you can see just how important that 6,600 level I've been mentioning a while now, 6,500, 6,600 is. For markets, again, arguably still in a downtrend off those mid-October highs, so there's definitely the scope for maybe a bit more FTSE pressure, but these are the big levels to watch. But I think, again, it's just a question of taking it day by day. I think there are some clearer sort of patterns in the forex markets, which we'll look at in a second, but it is, we shouldn't underestimate, I don't think, what a surprise this stock market reaction has been to this shock win by Mr. Trump. Leaving the politics to one side, it was the uncertain outcome, and stock markets to have recovered those overnight losses. That really is quite a surprising move. So let's see. I think for me, take it day by day. The S&P 500 technically still in a downtrend. 2150 to 2155 is a level to watch. We could well see, I think, maybe a couple of days of just nervous trading and people just trying to feel their way through to see how the market's going to react as this week goes on. If we take a look at the currencies again, of course, and some wild moves there. Euro dollar. I did tweet yesterday that I thought euro dollar was a buy, but there was no way I would have the guts to buy it 3 hours before, the US presidential election result coming out. And what I was looking at, you can see the moves overnight. We saw a 300-point rally in the euro against the dollar. So that started around about 1 o'clock this morning. So what we were seeing there was, that's dollar weakness is what we're seeing. So, it looks like Trump's coming in, and the one of the obvious outcomes you'd have thought would be for a weaker dollar, as a reflection of the uncertainty and the nerves at Mr. Trump winning rather than Mrs. Clinton. So we saw again this completely predictable move based on that, and then there's somewhat unpredictable giving it all back, and basically back to where we were yesterday morning. But I do think if you look at, I think I talked about my euro dollar trade in there last week when we were talking about stop losses, and the market's gone a little bit sideways since then. But I do think the downtrend that had played euro dollar for much of October, for 3 weeks in October, that is over. I was looking at, I think the levels I was looking at was probably this sort of trend off the lows. Oh, hang on, if I can draw my trend line straight. I mean, clearly, a lot of the chart levels have been sort of thrown somewhat up in the air by the crazy move. So I think there's an element, there's maybe even more of an element of subjectivity with this sort of thing than there is normally. But one of the things, I was noticing yesterday, okay, the market, the euro dollar had weakened, had come off again in response to that the FBI Clinton email news that broke over the weekend. We saw, weaker euro coming into this week. You can see the gap in Asian trading when it started from where it finished on Friday. And then euro weakness, dollar strength, as things looked like Mrs. Clinton was going to win. But down here, I think I've talked about this before. I'm not a massive fan of the old squiggly lines, the oscillators and stuff, but this is an RSI, 10-day RSI, and we do have what's known as bullish divergence. So where the market pushes to a low, then pushes lower still, but the RSI is almost trading up, or at worst case, trading flat. The RSI isn't pushing lower. So this can be a suggestion, like back here, like back on these old lows from the 3rd week of October. Market is going lower, lower, lower. The RSI is starting to trend higher. It can be a suggestion that some of the negative momentum is going out of the market. So for me, euro dollar, I'd still be a buyer. I still think that trend is up. It's all about where you put your stop. So I suppose the closest I would want my stop at the moment is probably the other side of that low, just before the market really took off last night, early this morning, and that's only 50, 60 points away. So for me, that would be 1 point to have the stop. But I do feel that trend is over. This trend, it's got a bit messy, but it's still intact. So I think I would still view any weakness, even back as low as here, 109.30, 109.50. So 100 points below where we are now, that's a buying opportunity. So let's see. Let's see what the rest of the week brings for euro dollar. But for me, I think the bias on that is still up. The pound's been interesting as well, of course, because again we've seen, not surprisingly, because it's all against the US dollar. We saw pound strength overnight. Again, that sort of that 1 o'clock in the morning move, all the way up to 125.5, so it put on a couple of 100 points nearly, and then it's given it all back again. But I think if we looked at how far back do we need to go, I think the fact that the pound has broken above 125.00, even though it's come back again, I think it does suggest that maybe, for those people out there who are looking for a pound recovery, maybe this is the first steps. We saw that crazy flash crash, that sort of in really thin Asian trading a while back, of course, back at the beginning of October. And then the market bounced, but only got as high as 124.80-ish. And then it sold off, but in its defense, it didn't take out that crazy spiky low. And we'd seen the odd rally, but it ran out of steam. It was a similar story we've seen for the pound, for much of recent weeks. But for me, the fact it has broken through that sort of post, what do we call it? Oh, I've drawn the wrong line there. But that sort of post flash crash high, I went 124.80, could mean, could think, well, actually, maybe we do start to build, a bullish argument here. So again, I suppose if you're really convinced, this could be the start of a push, maybe back to the 130s. One place to have the stop loss is the other side of the recent lows, which gives you, a nice tight stop loss, good risk reward if you think that's the move that's coming. But again, I don't think it's as compelling an argument just yet as the euro dollar argument is. But I think the fact we have seen the pound manage to break above 125, if only for a few hours at a time, it makes it, I think, an interesting market to keep an eye on. Everything else is still, I think, maybe a little bit messed up. And we've looked at Aussie dollar in the past. This is still interesting, but a bit inconclusive, I think, at the moment. We've looked. There are some big levels that I'm waiting to see if they break on Aussie dollar, because we'd had this downtrend for quite a few years. Well, not quite a few years. For most of this year now in the Australian dollar. We've seen, I think, a good recovery this year. The sell-offs haven't gone back to make new lows, and the market just keeps bumping up around here. And I think it's this 78.50, let's say, so 150, 160 points higher than where we are now. I think if we saw a move through there by the Australian dollar, US dollar, we can start looking at much more aggressive recovery targets. So it's been, as you can see, it's been a little bit quiet the last couple of weeks, fairly tight range. But I think if we can crack these sort of levels, we can start talking about a much stronger recovery. Of course, if you had a pessimistic view on the Aussie dollar, it's a good level to go short up here, because your stop loss is going to go the other side of here. And if you think that downtrend isn't over, then we should see a drop back, an 800-point drop back to those lows. But I just think the fact that we're not seeing such a swift move away from these old highs, does maybe somewhat suggest that maybe it is gearing up for a break. Let's see. Let's wait and see what happens. And the other one was dollar yen. I mean, that was moving clearly again last night. The dollar against the Japanese yen. Let's flip it over and have a look. There we go. So again, the dollar strength, sort of 1 o'clock in the morning, up to 105.5, and there it's a massive reversal. It was also one of the strongest movers on Sunday night on the Asia Open after that FBI Clinton email news broke. But a big turnaround in dollar yen overnight, 105.5, more than a 400-point turnaround back to those lows. But even though we've had that plenty of volatility, it doesn't really change. Still. This view that we've been looking at dollar yen for a while now, where we've had this downtrend. We've had, what continues to look like a significant basing pattern for dollar yen, but really we need to start cracking the 107.5, 108 levels to start looking for much more aggressive targets. So it's an interesting. But saying all that, the euro against the dollar spent all of last year virtually making a basing pattern. So this has only been going on for 4 or 5 months. So we could well see more of the same for some time, I think. So we'll see what happens to dollar. It's the same old story there. Weakness down towards 100 looks to be a buying opportunity. Strength up to the 106, 108 area looks to be a selling opportunity. And after last night's fun and games, it's left, it's sort of almost slap bang in the middle. So I think it's still a bit of a wait and see market, or to trade those extremes if you really want to. So just if we move away from FX for a bit, for me the interesting one is still euro dollar. I think based on the fact that maybe it's turning around, we're seeing continued turnaround of the weakness that had been in place for much of October. We have had this recovery up. We had clearly that 300-point rally overnight. It's giving up those gains. But I think that the bullish argument off these lows, the 25th of October lows, still just about stands for euro dollar. If it starts slipping below here, I might change my opinion a bit. But I think for me, I'd be more inclined to be a buyer rather than a seller in euro dollar. And the other one, clearly, we're on the news of the Trump win. The other market that was moving was the price of gold, of course, because I remember I did a webinar on this a few weeks ago. What can we expect from markets whether Trump or Clinton wins? And yeah, one of the most obvious ones. Well, if Mr. Trump gets in, it's going to be a surprise. People are going to be nervous. Blah blah blah. They're going to look for safe haven for their cash. Gold. Gold is the thing that's going to do well. And we did see that. Again, not surprisingly overnight, but once again, it's given back a lot of that move. Gold was trading around about the 1270-ish level at midnight last night. 1269.2 is where it was at midnight. And it traded as high 5 o'clock this morning as 1337. So it's a fair old move in the price of gold. And I think if you've been on these webinars before, I still think it's bullish. I think gold it is the moves we've seen this year have broken the back of the most recent downtrends. So for me, it pushed as high as 1370. It got clobbered beginning of October. But I was still bullish, as long as these sort of levels hold. So for me, we've seen this massive volatility overnight. But my view on gold is that trend is still up. I'd be looking for a move at some point back to 1370, and I think any weakness, back to, as long as we don't take out, the lows from May, and first of all, maybe with a tighter stop if we're looking at the daily charts, those lows from October around about 1240. Any weakness back to this sort of zone still looks to be a buying opportunity for me in gold. We did have that knee-jerk sell-off, but since then we've seen the buyers come back in. So yeah, I would expect, I think, further strength back up to the highs and ultimately through the highs. Because if we take maybe it's a slightly more long-term perspective for change. If you look at the weekly chart on gold, clearly it's a market that peaked back in 2011 around about the 1900 mark, spent a year going sideways, and then has been selling off. But if we pick up on maybe this more gradual trend from the summer of 2013, for me, this is the one. This is the trend that we have seen, sort of run out of steam with the strength this year. Looking something like that. So we've broken out of this trend. We had a steady lower highs, lower lows. So the move this year, for me, it's not a dead cat bounce. It's the start of a reversal. So the obvious target, first target, longer term target, 1400. After that, 1430. Assuming those lows from earlier this year hold. So I think it's always an interesting market, gold. I think particularly for more medium term opportunities, maybe rather than jumping in and out 50 times a day. And finally, oil. Oil is one where I think I have mentioned before my hatred of oil. Because it's incredibly volatile, which of course appeals to people. But I think it really can catch you on the hoof, this one, with some of the volatility. But we had that move out very briefly to fresh highs for the year back in October, which looked like a breakout, and then promptly a reverse, and the markets dropped back. It's 20% nearly, isn't it? 20% off those highs. But earlier this week, before all of last night's craziness, we had this steady decline in the price of oil, and then November the 4th, so end of last week, we saw a fresh low for the down move, so that downtrend very much intact. Let's just plonk a line on here from, I don't know, where are we going to draw it from? Well, I suppose if I cheated and drew it from there, there we go. So we had a nice little downtrend plugging away. But it was the moves towards, was it earlier this week? It was earlier this week. Yeah, the moves beginning this week. We saw that's Monday's trade. Let me just zoom in a bit. That's Monday's trade. And then on Tuesday, yesterday, we saw the market break out above Friday's high and Monday's high. And again, if you've sat through these things before, you'll know what a big fan I am. If a market starts breaking the previous day's high or the high from a couple of days ago, or the lows from a couple of days ago, it's a sign that maybe sentiment is changing. So yesterday, I was definitely turning into an oil bull, based on that. And the trade, again, it was a nice logical trade, because if you think, well, okay, it was a bit like the Euro trades I did the other week. If you think, well, okay, this is the start of a recovery, the logical place to have a stop is underneath that low from Monday, so 43.5. So a buyer at 45 maybe, and a stop under 43.5, and looking for quite a chunky retracement. Clearly, that's all gone out the window with what happened overnight. It's made a really messy chart now. but because we've pushed now to a new low for the downtrend, but now we're back up where we were yesterday. So oil, as ever, I think continues to be a market that is somewhat confounding and does its best to take everybody's money. But I still think, let's see how the next couple of days pan out. But I still think we're going to go back up above $50 a barrel. It's just whether we go back to $25 first. But I do think, what we were seeing earlier this week before last night's volatility was the first signs of maybe the start of a recovery in the price of oil. So in summary, nobody really knows. I think if we look at stock markets are going to be clearly the big focus this week. Let's go back and have a look at the Dow, and I think we'll see. It wouldn't be surprising to see some nervous trading today at 2:30 in the official US session, and maybe for the rest of the week. Maybe I think it's very hard, well for me anyway, to go into a session today and pick some levels to trade off, because the day before, the overnight session, we've had such massive volatility. If we've got 150-point range from the day before, there are definite highs and lows you can pick to do trading opportunities off. But I think when we have these swings like this, for me, I'd rather stand aside and just wait. Let's see what the market makes of it today. So that's for the Dow and the S&P. But for me, for the S&P, it's still that trend. So for US stock markets, they were in a downtrend before last night's craziness. If we get a return to normal over the next couple of days, the big level for this downtrend on the S&P for me is 21.55 to 60. If it rallies up to there, let's see how it performs. But it would be, from a textbook point of view, an opportunity to sell short if we recovered back up to yesterday's highs. Then maybe the more immediate one, like I say, is the euro dollar, because even before it decided to take off like a rocket last night, that trend had been up off those lows. So we've been in this trend for a couple of weeks or so now, haven't we? So I think it's going to be an interesting session this afternoon to see if it holds above yesterday's low. So personally, I would be looking for some sort of strength to start coming in and a buying opportunity, although we're not seeing that yet. This is an hourly chart we're looking at. It's still weak, it's still moving back off those highs, but maybe that's the more immediate one for me. And gold, the longer term chart, despite the overnight volatility, just for me confirms that gold still feels like it wants to go up, and go back and target these old highs and maybe 1400. So it's a bit of an odd one today. We'll start wrapping things up there. It's a bit of a strange one. Focus is going to be all on US stock markets, I think, the next couple of days. I don't think anybody would have forecast the reaction. Clearly not many people were forecasting Mr. Trump to win, but no one would have forecast, I don't think, the fact we'd see stock markets take it in their stride as well as they seem to have so far. So let's see how the rest of the day pans out. If you have any questions, drop me an email, david@tradeafter.com. You can find, one of the things I'm doing with Aondo, we did it last night, is social trading. So I did a webinar on social trading last night, which is very interesting at a time like this to spread your risk across a bunch of traders. And I wrote a bit more about social trading on my website, tradeafter.com. You can follow me on Twitter for sort of chart updates during the day, if there are any interesting levels to watch. But I think it's going to be, what time is it now? It's 1 o'clock now. So an hour and a half's time, all eyes on the US stock market. And I think we'll have an interesting session ahead. And I'm sure when we do this again, this time next week, things will be a lot clearer than they are now, because they couldn't be much more muddled considering the reaction we've seen in maybe the last 12 hours or so. Okay, we'll wrap things up. Thanks for coming along. Be safe, I think. Use stop losses. And hopefully we'll do this all again. I'll see you all again this time next week.